Hi everyone, a very good afternoon. So it is extremely a pleasure to welcome you all to our 109th webinar of Zen Tax Talks. So wherein we have been consistently able to provide exceedingly great presentations from the greatest of the GST experts to you directly from Zen Tax Clinic every week, completely free. So this has been possible only and only with your constant participation, and your regular participation is our biggest motivation to keep this going. So it is our very deep thanks to each one of you for being here with us today on this 109th episode of Zen Tax Talks. So here we have with us CAK Jaymohan, who would be taking us through the finalization of accounts from the GST perspective. So today in this digital world, all of us would be able to well understand and connect to the fact that once the 31st of March is over, not many things can really be changed. Your purchases are already freezed because whoever is your supplier, he has to raise a corresponding e-invoice, a corresponding e-label has to come. So whatever are your purchases are completely closed on the 31st of March. Whatever is your sale is also getting completed by the 31st of March. And there cannot be even the single or smallest of the changes with respect to your banking transactions as well. So with all this said, we felt that it is most important that we do any of the corrections required before the 31st of March itself. And that is the most important crux of this entire webinar, wherein we will have our expert speaker, CAK Jaymohan, who would be speaking to us about the finalization of accounts from GST perspective. But before we get started with the session, I really wanted to share something beyond GST, because 31st of March is not just the end for reconciliation on GST matters alone, but it is the point wherein for each of the businesses that we have to introspect on what was the actual business performance over the entire financial year. Some businesses track the financial performance over a financial year, that is the 1st of April to the 31st of March, and some businesses track the financial performance on a calendar year basis. If it is on a financial year basis, it can be very well understood that this is the last month of the financial year, and therefore it is really very high time that you compare the business performance for the financial year 24-25. That is the period from the 1st of April 2024 to the 31st of March 2025. Compare it with the business performance for the period of financial year 25-26. This is the first and foremost important aspect that needs to be done, because on multivarious factors, your business performance, your top line improvement is also of utmost importance. Why is my top line of utmost importance? Say, for example, you are maintaining a cash credit limit or an overdraft limit with any of the banks. Banks would be able to fund for the working capital purposes only to the extent of 20% of your reported turnover. So if you have not met your turnover by this date, it is extremely very important that you take very quick steps to make sure that you are able to liquidate your stock, sell, and get your sales corrected. Number one. Number two, beyond GST, 31st of March is generally the time period where most of the businesses conduct a very extensive verification of their stock holding. So what is the physical stock available needs to be verified for various statutory purposes, including the company law provisions, and also for the purposes of every statutory audit. Therefore, it is extremely very imperative that every business takes effort to make sure that the stock as of 31st of March is very well established. Sir, for verifying the physical stock as of 31st of March, should I do the stock verification only on the 31st of March, only on the 1st of April, or can I do it even today and tomorrow as well? Yes, you can. You could initiate the stock verification and even complete it today itself, for the simple reason that you could adopt these cutoff procedures to ensure. how you would be able to reconcile it to the stock as of 31st of March. So it is not just about the finalization of accounts from GST perspective that is relevant for the 31st of March, but also for the statutory audit purposes, for the company law compliances, for the business as such. It is extremely very important for the bankers. So for every stakeholder, 31st of March gains utmost significance, and therefore, and as I already told you, you cannot really correct most of the things. 99% of the things cannot be corrected once end of the year is over, once the 31st of March is over. So therefore, at this time, you need to really reflect back on whether the numbers actually make or have met the actual budget. Say, for example, if you have already made a budget for the financial year, and now is the time to reflect back to say, why my actuals is not equal to the budget? Can I make any course correction in the next 3 to 4 days? If at all possible, that correction needs to be immediately undertaken. Say, for example, it is an MNC business which is maintaining the accounts for a calendar year. Then I would definitely say the first 3 months of the year, that is the first quarter of the calendar year, is already over, and therefore there is also very important significance that you need to make sure that you are aligned with the budgets and the business trend and the business plans as such. Beyond everything, beyond GST, we had a very dedicated session speaking about the income tax, which is getting completely changed from the 1st of April 2026 until the 31st of March 2026. We are governed by the provisions of the Income Tax Act 1961, and from the 1st of April 2026, the Income Tax Act that is going to be applicable is Income Tax Act 2025. Therefore, immediate changes are required with respect to the various sections of TDS, various sections of TCS, because the existing legal provisions under section 194C, 194D, 194H, none of these provisions continue to exist. The sum and substance of the new act is very much akin to the sum and substance of the existing act, but still the section numbers, the wordings of the sections have got completely changed, that it requires a mandatory compliance that we change the books of accounts to be aligned with the new requirements of the Income Tax Act 2025. This is as well another very important aspect. Then the next, third most important aspect that I would like to discuss about is something which I would also be discussing. That is, under the laws of GST, there are some industry-specific compliances or transaction-specific compliances, such as some compliance which is exclusively pertaining to an exporter or a person who is making any supplies without payment of tax. Say, for example, a zero-rated supply. Or, say, for example, a hotel industry. Say, for example, a GTA industry. Some industry-specific compliances are required to be done very specifically before the 31st of March. And any failure on these would be a procedural violation, and therefore the tax liability on these outward supplies can also get triggered. Therefore, this is also one of the important aspects that needs to be taken care of before the 31st of March. So, to deep dive onto this subject, our expert CAK Jaymohan will take you through the entire fine nuances of things. So, at this juncture, I personally and on behalf of the entire team of Zentax Clinic wish each one of you a very happy and a prosperous financial year 26-27 as you look forward towards. So no more concept of the assessment here. We talk all about the financial year and the tax year. So here we have Jaymohan who's ready with the presentation. So Jaymohan, over to you, please.
Thank you so much, sir, for the introduction, for introducing the topic to the audience. So once again, I welcome all of you to today's session, or today's webinar. As Aravind Tangam sir rightly mentioned, this is the last webinar for the financial year 2025-26. So similar to every year, if you look our YouTube page, you can find that each and every year we do a webinar exclusively related to the compliance activities that has to be handled along with the closure of books of accounts as on 31st of March 2026, which happened to be a tax year for us. So along with these transactions, what are the other changes that we try to bring to you is that the circulars that has been issued between this financial year, the clarifications, GST 2.0, the rate changes that happened in between the year. So what are the intricate aspects that we came across during our journey during the financial year 2025-26, which we have noted and observed, and we felt that sharing these insights will also be very much useful to all of you to keep yourself immune from further tax litigations and reporting any kind of discrepancies in your returns, that GST returns that you are going to file for the month of March 2026. So that is the main idea behind doing this session consistently for each year, right? So we'll start with the slides. Second, the slide is not visible. One second. Okay, so I hope the slides are visible for all of you. See, the most important and fundamental aspect to check with regarding to GST is that what is the closing balance of GST as per the books of accounts compared to the closing balance of GST which is available in the electronic credit ledger. This is the most fundamental and rudimentary aspect that each of you have to ensure that both of these balances align properly. There might be certain transactions which are available in the books of accounts, but which are yet to reflect in your GST to be returns. There might be some credit notes which you have accounted in your books of accounts, which are not yet reflected in your GST to be returns. So all these transactions, and also there can be certain transactions related to ITC reversal, which you identified at the time of filing your GSTR 3B return, and you reversed it promptly in your 3B return, whereas the same effect has not been given in your books of accounts. So for all these multiple reasons, there might be a situation where the balance as per the closing balance, which I mean is the net balance of all GST ledgers. I'm not talking independently about the ITC and liability separately, not like that. The combined balance of the net balance of the debit and credit transactions put together, that you have to check with the balance as per GST portal. If you accumulate ITC, if you have ITC accumulated in your credit ledger, then you have to compare it with the balance available in your books of accounts. If not, then the payment made by you in your GST returns, whether that payment matches with the outstanding liability that is shown as of 31st of March 2026, right? So, see, why I am emphasizing on this is that more often, for quite many years, we have come across a lot of businesses who are not taking utmost care at the time of finalization of books of accounts in transactions related to GST. So this is something we have always come across. We also used to try to tell each and every business people, each and every taxpayer, when we talk to them, see, we ask only one question. If it is a bank account, say for example, you have a bank account, in the bank balance as per the statement, there is 15 lakh rupees. And as per your books of accounts, it is showing only 10 lakh rupees. Will you keep it as such? Will you keep that discrepancy as such and proceed to close your books of accounts or file your subsequent returns based on that income tax returns? You would never do that. See, I'm not talking about the suspense adjustment and those kind of things. See, you will always have a reconciliation of transactions that would lead to a differences between the bank balance or a fixed deposit, which is of actual monetary value for you, right? What about the ITC? That is also something which has got a monetary value. ITC is nothing but the GST component that you have paid to the government through your suppliers. So it is also having a monetary value. How can you just leave it just like that and proceed with closing of books of accounts without actually reconciling the figures? So this is why it is of utmost importance. And we will see what are all the other aspects related to it and how to match. See, I have a separate slide which talks about the various situations which can lead to discrepancies between the GST balance as per books of accounts and the GST balance as per your common portal, right? So here, if you encounter with such a situation, what would be your decision? See, what would you do actually? If there is excess ITC in your GST portal, say for example, this is a situation where you are comparing your books balance with the portal balance and you have some excess ITC available. So blindly, will you go forward and reverse the ITC in your portal? Is that what you are going to do? Or if there is lesser ITC, then how will you claim that ITC in your subsequent return that you will be filing for the period of March 2026? Can you do it? See, say you do not have any balance in your electronic credit reversal and reclaim statement. In that situation, if you put any amount which is in excess of net ITC as per your GSTR 2B in table 4A5 of your GSTR 3B, then you will be welcomed by a notice by the GST department. The automated generated notice in form DRC01C would be sent to you asking reasons for why you have claimed excess ITC in 4A5 when compared to net ITC as per 2B. So that also you cannot do. Then the other aspect is the most obvious one, which you can straight away go to your jurisdictional officer and ask him or her what you can do about this. So that you might not, most probably you might not get a proper answer for this question from the departmental officer. So moving forward, we will see what we can do on the basis of each cases and what are the adjustments you have to do in your return and what are the adjustments you have to do in your books so that the balance matches, right? First and most important aspect related to transactions is that how will discrepancies arise? If you are someone from state of Tamil Nadu and you have been served with the ASMT 10 notice for the financial year 2023 and 24, you would have already noticed there are certain discrepancies which has been intimated as per section 61 by comparing the output liability reported in GSTR 1 versus the output liability which is reported in e-waybill transactions and also e-invoice transactions. For e-invoice transactions, it might be like you are enabled for e-invoice, but you have not generated e-invoice for that particular period. Let us keep that aside for a moment. So first we will come to the GSTR 1 and e-waybill. Say you are a manufacturer or a trader who is predominantly engaged in supply of goods. See, supply of services, generally e-waybill does not come into picture. If you are a supplier of goods, in that case, reconciling the transactions as per GSTR 1 and e-waybill is of utmost importance. Why? Because we have come across certain errors, certain manual or clerical errors, wherein the e-waybill number is incorrectly reported in the taxable value while generating e-waybill, not e-waybill number, some other mobile number or something of that sort, like 11-digit number. And then you can also, it also happen that the exact nature of the transaction, whether it is an outward supply, whether the type of document is a tax invoice or a delivery challan. So all these aspects, there can be a situation where there are some clerical errors. So if you reconcile and see if all the transactions which are related to goods and which crosses the threshold limit which is given under Rule 138, where you do an intrastate supply within the state of Tamil Nadu, then the value for which, if the value of goods for which, if it exceeds e-waybill has to be generated is 1 lakh rupees. And if it is an interstate supply, then 50,000 rupees. So based on these aspects, you have to reconcile the transactions from GSTR 1. you have a set of transactions for which e-waybill is applicable and for which e-waybill has been taken. Then you have a certain set of transactions for which e-waybill is not applicable, and then no issues are there. But then there will be certain transaction for which e-waybill is applicable. It might have been generated by our customer. There are certain situations where the customer says that, see, it is my transporter or it is my own vehicle. So you generate the invoice, I will generate the e-waybill. So in such circumstances, what you have to do? If there are such circumstances, then you have to get the details of e-waybill from your customer and keep it on your record. Because if there is a situation in future where the movement of goods is put to question, in that situation, this documentation will come to your rescue, right? So GSTR 1 and e-waybill report, you have to reconcile. There can also be certain situation wherein in the last 5 or 6 days of March of a financial year, you have raised a bill, but e-waybill is generated only in the first week of April. So that might also happen. So reconciling the transactions will make sure that when there is a notice which is issued to you at a later stage, you can right away, you will have the reconciliation and details where some discrepancies has occurred. You can also submit these details with a covering letter, with the support of a covering letter to your jurisdictional officer, and voluntarily inform the discrepancies with them. So that is also an option, right? So this is about the e-waybill transactions. What about e-invoice transactions? See, the government has been actually closing their hands with related to e-invoice transactions. Initially, there was no time limit to report e-invoice, or when the invoice is issued and generate the IRN number, there was no specific time limit. Then a time limit was introduced for taxpayers who are having turnover above 100 crores. Then it was again brought down. As of now, you can see that taxpayers who have turnover more than 10 crores, only 30 days is available for you to generate e-invoice for a particular invoice. So even as on date, if you have missed to generate IRN number for any transactions for previous months, it will be very, very difficult for you to generate e-invoice for that particular transaction. The only way is to wait for the officer to find out the issue, then charge you a penalty and then comply. See, there just issuing a credit note for that invoice and then issue a new invoice and then raise a IRN number, that will not help you in real sense, because issuing credit note, you have to satisfy the conditions which are laid down under section 34 of CGST Act. You cannot issue a credit note just like that for the reason that you have issued invoice but you forgot to generate IRN number. So that can never be a reason for issuing a credit note. So for that reason, please be mindful. And today, I see that a lot of ERP solutions, be it Tally, be it Zoho Books, be it Odoo, any ERP solutions, they come in with an API integrated platform wherein the invoice, once it is generated, the data is pushed to the GST portal and IRN is automatically generated, right? So in this situation, even the department would turn a blind eye if you go and say that I forgot to generate IRN number. So please make sure that your system is there in place to ensure for all transactions, e-invoice has been correctly generated. Even if you take the case of monthly returns, once the 30-day period is over, then it will be very difficult for you to generate the IRN number. So please be mindful of this situation. Another important aspect related to the invoice is that, see, you have failed to generate IRN number. Okay. You are saying, see, I will be subjected to penalty. So there are only 2 or 3 transactions for which I missed to generate invoice, and I will happily pay the penalty. This is your stand. So what happens here? You have issued an invoice, and based on this invoice, your customer has taken input tax credit, right? See, if you have not complied with Rule 48 Sub-Rule 4, then the invoice which you have issued itself is not a valid invoice. See, if it is not a valid invoice, then based on that, how will your customer claim input tax credit? this is a very serious, very serious lapse. If at all you are doing it, so please verify that for all the invoices, IR number has been generated and which is also furnished in your GSTR1 return, right? We discussed about all this aggregate turnover 10, about 10 crores and these points we discussed. So e-way bill, I already told you there are certain transactions for which e-way bill will not be required. So if e-way bill is not required, and also if the e-way bill is generated by any other person, then please get a copy of e-way bill and keep it for yourself and keep it for the documentation purposes, right? Now we will move on to certain transactions or certain instances which could be overlooked by us at the time of filing GST returns. So what first point is the revenue from operation, where revenue recognition and supply under GST, there is a difference. For example, I am a person who is involved in manpower supply. Okay, so I am involved in manpower supply. It is a service activity. So every month I will be supplying the manpower labor to a factory, and once the month is completed, I will issue an invoice based on the attendance records that is given to me by my customer and the attendance record that I have. I will reconcile these attendance records, and then based on the how many people have worked for how many days and how many hours, on the basis of that I will be issuing an invoice, right? Generally, it will take 2 to 3 or 4 days post closure of a month to issue this invoice. So in this situation, what will happen? The accounting standard says, be it accounting standard 9 revenue recognition or accounting standard 115 under Ind AS. So be it these two type of transactions, then you will have to recognize the revenue on the basis of unbilled revenue, right? Because the service is fully completed within the 31st of March, only the billing or the raising invoice is pending. For that reason, an entry will be passed that provisionally revenue will be recognized in the books of accounts, whereas it will not be reported in the GST return for the month of March. It will be reported in the subsequent month for the month of April, and for this reason, this will be a reconciliation item. So revenue recognition, for the reason of revenue recognition, there can be a situation where a turnover difference can exist between GSTR return and GSTR 3B, GST returns and the financial statement return. This is a common occurrence in real estate where the revenue recognition happens on the basis of percentage of completion method that is followed in the construction. And whereas for the advance received from the customers, GST will be paid even without the issuance of invoices. So this could happen. What about the credits in expenses account? See, there are many situations where people who are dealing in packing, repacking of goods, what they do, they directly collect the transportation charges or packing charges, and then they will credit it to the corresponding expense account. So when they credit it to the expense account, GST is not collected on that. GST is not charged. Even in the accounting entry, it is not accounted in that manner. So there might be a situation where this particular transaction forms part of value of taxable supply as per section 15 of CGST Act, whereas you have missed to consider it as a transaction which is subject to GST by netting off it with the expense ledger. So do verify your expense ledgers, and if there are any credit entries apart from the provision and reversal entries, then please note it. And if there is applicability of GST, please ensure that these transactions are appropriately reported in GSTR 1 and 3B for the month of March, and it will ensure that your audited financial statements is in line with the GST returns. Then comes the employee recovery transaction or deemed supply transactions as per Schedule 1 of GST Act. So what does Schedule 1 talks about? It talks about the transactions which happens between distinct person and related person, which are considered as supply even without consideration. Even without consideration, these transactions are considered as supply. So for that reason, if there are any employee recoveries, so if there is a canteen recovery from the employees, which is made by the employer, then whether that is subject to GST. If there are any other transactions which are related to corporate guarantee, which are given between the group companies, or if there are any other transactions such as one company has the ownership of a trademark or a brand, and the other companies are using it simultaneously, wherein there are no other invoices which are issued between the companies for such transactions. So for that transactions also, you please verify. If you are a private limited company, basically if you are a private limited company, if it is related to movement of goods, then definitely it is most likely to happen that you would have issued an invoice. But about the services, and also where actual consideration is not involved, that is where it is highly likely that you might have missed to account that transaction, the impact of GST for that particular transaction. Then comes the deletion of fixed asset or sale of fixed asset. See, generally in most of the ERPs, sale transaction would already be configured, right? So whenever you pass a sale entry, then GST liability get triggered, GST ledgers also get impacted. But what about some non-recurring transactions such as deletion of asset, sale of asset? In those cases, then you will have to see what was the ITC which was taken, if it is a second-hand car or a used car, or what is the WDV of that asset. Then you will have to compute what is the ITC reversal applicable, or what is the outward. If you have claimed ITC, then what is the value for which you are selling it, and what is the rate of tax you have to apply. All these aspects, which are nuances related to the deletion or sale of fixed asset, you have to ensure. And please note that you make a depreciation schedule, or you just take a note of transactions which has been happened during the period, because the accounts wouldn't have been finalized. The cash flow statement or other statements also would not have been prepared ideally. But if it is already prepared, then just run through the cash flow statements and you might find the sale of assets over there, or a deletion of assets. If deletion of assets, then ITC reversal, whether it is applicable. So for all that reasons, you please ensure that these transactions are also kept in your checklist at the time of finalization of accounts. Then miscellaneous income, which is reported as other income. See, there might be some one-off transactions which might have happened, some commission would have been received. So what these transactions also, please make sure GST has been appropriately charged if it is applicable, or if it is an exempt transaction, then it is appropriately disclosed in the GST returns. Next, advance received. See, advance received against the supply of services. It is an important aspect where you are engaged in supply of services. At the time, the point of supply, the point of taxation is where the time of supply, actually the exact term is time of supply. So time of supply is at the time of receipt of money. When you receive the advance itself, you will have to discharge the GST liability on it, and you will have to report it in table 11 of GSTR 1 return as advance received. Once you are issuing invoice for this particular transaction in the subsequent period, then you can show it as advance adjusted, and you will not actually have to pay GST on this transaction twice. Once you pay as advance, then you can treat it as advance adjusted in the subsequent return and discharge your GST liability. So more often, where in such a situation where the taxpayers are regularly involved in collecting advances and rendering services, this is not missed. But when you are undertaking new service, or you are predominantly engaged in supply of goods, but the portion or component of services is less, in that case, you have also received advance. It is most likely that you will miss to report this transaction or miss to pay the GST liability. In that case, at a later point of time, if the GST officials identify these transactions through department audit or through any other means in that situation, you will have to pay it along with interest. Even though the transaction is already reported in GSTR1 return, the time of supply comes well before, and from that point of time, you will have to pay interest to regularize this transaction. So this is an interesting topic regarding the post-supply discounts which are given to the customers in form of credit notes, right? There are two types of credit notes. One is with GST and another one is a financial or commercial credit note, which is given in form to pass on the discount by the manufacturer to the trader or a dealer to the sub-dealer, any one for that matter, right? So there are different type of discounts as I have mentioned in this slide. So each and every discount, if you are reducing the tax liability, then it has to comply with section 34 of CGST Act 2017. It says that where the tax invoice exceed taxable value or tax charged, so or where the goods are returned or found to be deficient, in that situation, the registered person can issue credit notes, right? The last date to issue a credit note for transactions related to financial year 2025-26 is 30th of November 2026. So that also you will have to keep in mind. So once you have reviewed all the transactions and once you have obtained the closing balances confirmation from your customers, based on that you have to check and ascertain whether there is a necessity to issue a credit note with GST for this transactions, right? There are some issues also. During the year, there was a circular number 251, which was issued to clarify certain transactions related to ITC reversal or outward supply, which is closely linked with discount. So we will see these transactions in detail. So first transaction, whether there is a requirement to reverse input tax credit by the recipient where the supplier has issued a financial or commercial credit note. So in this situation, what happens? The supplier issues credit note, but at the time of issuance of invoice, the supplier has paid GST for 100% of the value. There is no dispute on this fact. Later on, to pass on the discount, they have issued a commercial or financial credit note without GST. So it means that the supplier has themselves not reduced the output tax through this commercial or financial credit note. So for that reason, in this circular also, it is clarified that in this situation, the recipient is not required to reverse the input tax credit if the supplier has issued discount through the way of commercial or financial credit notes. What about another situation wherein this financial or commercial credit note is been issued as a monetary value to induce the supply of goods by the manufacturer, right? The manufacturer is issuing the credit note to the supplier. What if it is issued in course to induce the dealer to sell the goods? So even for this particular transaction, it has been very well clarified that when it is done on a principal to principal basis, when the sale happens between the manufacturer to the dealer, it is a one transaction, it is an independent transaction wherein the transaction curtails upon receiving the payment from the dealer and it is completed. Then the dealer is subsequently selling it to the end customer. It is a distinct transaction. So whenever there are two independent transactions and when there is no agreement regarding the supply discount and the inducement of supply at the customer's end, in that situation also, it is not considered as a consideration for this transaction and GST is not applicable on this transaction. Then another situation is where the post-sale discount is extended by the manufacturer and the manufacturer and the dealer both of them in a combined manner undertake lot of sale promotion activities, right? You can see there are multiple campaigns that are being run by the dealer and the manufacturer put together. And for this purpose, the manufacturer is paying some amount to the dealer. So all these kind of transactions generally happen where in case of a car dealer, in case of a two-wheeler dealer, or in case of FMCG products, when the dealer is trying to push the products. So it might happen, right? So even in this situation, the circular has specifically clarified that. So only if there is a pre-existing agreement, then only the amount which is charged will be considered as a consideration for a supply and GST is applicable. Otherwise, GST is not applicable for such transactions, right? So we saw about the credit notes also. Now we will move on to the time limit under section 16 subsection 4. So each one of you, every one of you, I assume that you are all familiar with the time limit as per section 16 subsection 4. So please do ensure that you claim your ITC within 30th of November 2026 and you will not leave it lapsed. So here I want to ponder upon another important aspect which comes to me so often. What about the balance lying in electronic credit reversal and reclaim statement? During the financial year 2025-26, certain transactions you have marked as you have reported under table 4B2 of GSTR 3B returns because these transactions are reflected in the GSTR 2B. However, you have not yet accounted it in your books of accounts, right? So for that reason, you there is a accumulated balance lying in electronic credit reversal and reclaim statement. What about this balance? Whether section 16 subsection 4 compliance has to be ensured for the balance lying here also, or whether it has to be ensured only for fresh claim of ITC where you have not at all reported anywhere. See, there can be two stands where if you have claimed ITC in your credit reversal and reclaim statement, the department might take a stand that see, it is not credited to your electronic credit ledger. So for that reason, you have not claimed it in the first place. And section 16 subsection 4 time limit is applicable, even though it is parked in the electronic credit reversal and reclaim statement. The reclaim that is mentioned here and the reclaim which is mentioned in Rule 37 or Rule 37A for that matter is different. See, the ITC that you are reversing based on Rule 37 or Rule 37A compliance, where you have not made the payment to your supplier within 180 days, or where your supplier has failed to file GSTR 3B return and deposit tax to the government. In that situation, immediately you are triggered to reverse the ITC, which you have already claimed in your electronic credit ledger. Subsequently, once you have made the full payment to your supplier, then you can reclaim the ITC as per Rule 37 sub Rule 4, right? There is no restriction of time limit. It will not be barred by section 16 subsection 4. But in case of electronic credit reversal and reclaim statement, the department might take a stand that in the initial transaction itself, you have only kept it in abeyance in credit reversal and reclaim statement. It has not been credited in your credit ledger. So for that reason, please review the bill-wise details of transactions that are reflected in your credit reversal and reclaim statement and ensure that those transactions are also, for those transactions, ITC is claimed within the time limit prescribed under section 16 subsection 4. Another important aspect which is overlooked and which is missed is issuance of self-invoice under the GST RCM provisions, right? So for RCM, if a reverse charge mechanism is applicable for a particular transaction, then for that you have to claim ITC also, right? So to claim ITC, you have to claim with the strength of an invoice as per section 16 subsection 2. In that situation, you will have to issue a self-invoice, and that self-invoice for registered person, there was a time limit before itself, it was always governed by a time limit, and the claim of ITC is definitely restricted, which is covered under section 16 subsection 4. For all RCM transactions also, you will have to ensure that section 16 subsection 4 time limit is covered. What about the unregistered transaction? These inward supply received from unregistered taxpayers. Even in these transactions, now Rule 47A is applicable. Then the time limit to issue invoice, self-invoice has been provided in 2024 itself. So you please ensure that you have raised self-invoices for all the RCM transactions, be it registered or unregistered, and you have claimed the ITC within section 16 subsection 4 time limit. So these issues we have already spoken about. Rule 37 sub rule 4, then 16.2c. See, 16.2c just talking about a development which happened recently. In the case of Sahil Enterprises, in the Honorable Tripura High Court, we got a judgment wherein section 16 subsection 2 clause C was read down by the High Court. But even though it happened, I urge all of you to make sure that GSTR 3B returns have been filed by your suppliers. Please make it a practice to follow the GST compliances of your supplier, and please ensure that you are making the payment of GST wherever required or wherever it is possible. Please ensure that the component of GST is paid to your supplier only when they have complied with the filing of returns. So in that manner, you can also have a control practically. This is for practical aspects. In the provisions, nowhere it is stated that the recipient has some control over the transaction of your suppliers. But for all practical purposes, I am urging that you keep a record and please insist your suppliers to comply with GST filing in a timely manner. And related to Rule 37A. So Rule 37A, both of that we have already spoken about. Now we will move on to Rule 42 and Rule 43 reversal. Section 17 subsection 1 and 2 and 3 talks about various situations where ITC is restricted, right? So when the taxpayer is involved in transactions which are exclusively exempted, then the taxpayer is not entitled to claim ITC at all. When they are involved in transactions which are partly taxable and partly exempted, then you have to come to Rule 42 and Rule 43 to find the proportionate ITC, which has to be reversed in the course of year. So you review the transactions, the whole transactions for the financial year. If you are engaged in any exempted turnover other than interest income or MEA scrip sale, so certain transactions are excluded from the terminology of exempted turnover for the purpose of reversal under Rule 42 or Rule 43. So if those transactions are not affected by you, then well and good. But if you have engaged in such transactions, there are some exempted turnover. In that situation, you review and make a calculation. You do a calculation as per Rule 42. You identify what is the common credit, then proportionate to the exempted turnover. You make a reversal and report in your GSTR 3B returns. Later on, when you are filing GSTR 9 return also under Table 7, there is a separate line item for Rule 42 reversal and Rule 43 reversal where you can report it, and these transactions will not show any discrepancy. And whenever you receive a notice in ASMT 10 asking for a common credit reversal, in that situation, it will be easier for you to substantiate your workings, right? So please do make sure that the common credit reversal is complied with. Moving on to GST RCM transactions. See, RCM transaction, the basic aspect we will go through is that whatever RCM transactions that are reported by our suppliers in GSTR 2B, please ensure you have paid it in full. There might be a situation where your supplier has incorrectly chosen RCM as yes for certain transactions, in that case, you please inform them to file amendment. See, if they file amendment for the March return itself, then there will not be any discrepancy for you. But if they fail to file amendment, then in subsequent returns, see, amendment is possible in April return or May return also, amendment is possible, but you can make sure that you're at the time of closure of books, if there is any RCM liability which has went unnoticed or which is not booked, then you can either book it and close your books of accounts, or if it is not applicable, then you can ensure you can be at peace. Saying that you have already communicated it to your supplier and they will file an amendment return, and in GSTR 2B, RCM transaction will not be there in that situation. So what are the common transactions which the taxpayers generally comply with? The freight charges paid to GTA. Generally, most of the taxpayers comply with this RCM provision, and they ensure that for the freight charges, they are paying RCM in GSTR 3B, and also for security services. What is the reason? I will tell you, these two transactions, most of the transactions are reported by the supplier as taxable under RCM in their GSTR 1 return. If it is already reported, then it comes to your notice and you will make payment for it at the time of filing GSTR 3B. What about the transactions which I have listed to the right side, where you have made payment for legal charges? In that case, no one will report the transaction in GSTR 1. Then about the government services, you have already made the payment to the government transactions. What is the transaction for which RCM is applicable? Whether the department to which you have made payment is a central government or a state government or a local authority. So all these questions will pop up. These transactions will not be reported by the vendor in their GSTR 1 return. So it is highly unlikely that you might miss these transactions. So please do ensure that all the payments made to, whether it is for legal or whether it is for government transactions, set an internal control to identify such transactions, be it by using the name of the vendor, or be it at the time of creation of vendor master, you are adding a tag to it in whatever practical ways possible, which is allowed by your ERP environment. Please make sure that the RCM transactions are properly identified. Then there are also other transactions where related to motor vehicle rent-a-cab transactions, for which also RCM is applicable. Then import of services. See, in these days, we see that many businesses subscribe to foreign online software solutions. So mostly the payment is made in dollars or other foreign currencies, and the invoices are also not issued. So in this situation, it is very, very important that you identify such transactions, and wherever import of services RCM liability is applicable, you have to make payment for that also. If you are a company who have been making payment abroad for getting some licenses or for getting some consultancy services, in that case, there is a possibility that you might have issued Form 15CA or 15CB. These forms can be downloaded from the income tax portal. Please verify if there are any such forms which are issued during the year. And if it has been issued, then make sure that for import of services, you have paid GST under RCM, and you can also claim input tax credit for that. Rent paid for immovable property. See, rent paid related to immovable property, whether for residential dwelling purposes or for other than residential dwelling purposes, 2024-25 itself, RCM is applicable from 1st of October 2024, right? So for that reason, these transactions will also be not reported in GSTR 1 by your vendors. So make sure to scan your indirect expenses schedule at the time of closure of books of accounts, book the GST payable entry and also ITC entry, and make sure that in the month of March GST returns, you make the subsequent payment and regularize these transactions. Now we will move on to certain closing balances and reconciliations, right? So here I have taken the screenshot of electronic credit reversal and reclaim statement, which is showing a very huge balance. So I already spoke about the electronic credit reversal and reclaim statement. If there are any huge balances, make sure that you prepare a reconciliation and what is the reason for not booking the invoice, whether it is a manual error, whether it is an error of omission, where it might be due to various reasons. So please ensure if there is a huge balance which is lying in your credit reversal and reclaim statement, reconcile the transactions, get the bills from your concerned departments, book it. Otherwise, your P&L will show a very incorrect picture. The expenses to the tune of crores and crores will remain unaccounted. See, it is not likely that such a situation will happen, but it might also be due to a reason where you have entered an incorrect opening balance in your credit reversal and reclaim statement. Can also be a situation where it is showing a negative balance. If it is showing a negative balance, it means that you have reversed a portion of ITC and you have claimed in excess of the reversal. So that is also incorrect, and it might also come in subsequent months where if you have a negative balance in electronic credit reversal and reclaim statement, it will be added to your output tax liability in your GSTR 3B by the system itself. So please brace for that. So if there is a negative balance, please make sure it is corrected, rectified properly. If there is a positive balance and the bills are pertaining to previous periods, then you follow up with your suppliers, get the bills accounted, and then claim ITC within the prescribed time limit. Now we will move on to the reconciliation of closing balances. So if you take the books of accounts, you have accounted all the purchase transactions for which goods have been received or services have been received, right? So out of these transactions, there can be some reasons, and due to these reasons, the balance of GST, which is shown as per your books of accounts and which is reflected in your GST portal, might not match, right? What are those reasons? First and foremost reason is the transaction which you have accounted in your books of accounts is not reflected in your GSTR 2B. Your supplier has not filed the GSTR, the invoice, particular invoice in your GST, in their GST returns. So you have to follow up with your supplier and make them file the transaction promptly in their GST returns. There can be another situation wherein you have to reverse the transaction in your books of accounts. You have already reversed in your GST portal because this is an ineligible ITC, but you are yet to reverse it in your books of accounts. For this reason also, there might be a difference. Then the TDS balance. When you are engaging in transactions with public sector undertaking, government entities, or e-commerce operators for that matter, TCS or TDS deduction or TCS collection is possible. So it will come to your TDS statement. You will have to go to TDS and TCS returns, then file it and claim it to your electronic cash ledger. So if there are any balances which is lying unreconciled, please make sure that you have claimed it in your electronic cash ledger, so that the balance as per electronic cash ledger and the books of accounts is tallied. And for refund receivable, you might be applying refund under LUT mode, wherein you are making the export transaction without payment of tax, or you also might be making export transaction by making the payment of tax with payment of tax option. So under these two options, your ITC is exhausted, and the ITC has to be kept in abeyance in a separate ledger, refund receivable ledger. So once the refund is received in the bank account, then you can knock it off. But you have to keep it outside the ledger because it is already not available in your electronic credit ledger. At the time of filing RFT 01 itself, it is reduced from the credit ledger. So for that reason, this can also result in discrepancies. Then moving on to GST portal. See, in GST portal, you also make sure that, see, when about the refund or the amount which is reflected in the electronic cash ledger. So if you have control over your books of accounts, then the GST portal also, it will be in line. The only transaction which you have to be mindful is that the credit reversal and reclaim statement, where you have not claimed the transaction into your electronic credit ledger itself, but this is also not available in your books of accounts. So monitoring the balance of electronic credit reversal and reclaim statement as per GST portal will ensure and will also help you to reconcile the balances and close the books of accounts correctly for the financial year ended 31st of March 2026. At the beginning of this session, Arvind sir was talking about a certain situation where a specific industries has to take certain actions by filing certain forms to the GST department. And these forms amount to intimating certain activities which are going to be undertaken by these business entities, right? So specifically, we are talking about two forms. One is with the restaurant service providers, hotel and accommodation service providers, wherein they have to file Annexure 7 if they intend to keep their place as a record their place as a specified premises. Why specified premises? If during the financial year 2025-26, any unit of accommodation has been rented out for a value of more than 7,500 or equivalent, in that situation, the property automatically becomes a specified premises, and in the subsequent financial year, the restaurant services which are undertaken, restaurant or outdoor catering services which are undertaken in the specified premises is taxable at 18%. If you are unsure, then you can voluntarily come into this option by filing Annexure 7 and declaring the premises, the address as a specified premises. So this compliance, you have to make it, file it within 31st of March 2026. For goods transport agencies, have an option to go to charge GST under forward charge mechanism or under reverse charge mechanism. So if they are going to charge GST under forward charge mechanism, they have to file Annexure 5 within 31st of March 2026 and choose that option to collect tax under reverse charge forward charge mechanism. Otherwise, they can also choose the option to do supplies, to engage in supplies under reverse charge mechanism also. So ensure that if you are a GTA and you are intending to do services under forward charge mechanism, then you are filing Annexure 5 within the stipulated time period. We will run through few other issues. So non-reporting of exempted turnover in GSTR 1 and 3B. See, in the ASMT 10 notices that we have received, we have come across several instances where in the P&L account, this exempted transaction will be reported, and in the GSTR 1 and 3B returns, it is missed to be reported, and the difference in turnover is treated as taxable turnover by the department officer, and it is the tax is quantified in the notice. So please make sure that exempted turnover also is a turnover under a GST. You have to report it in GSTR 1 and GSTR 3B as well. It will ensure that there is no discrepancies between the financial statements and your GST returns. Then verification of export ledger and status of invoices not transmitted to IceGate. See, when you are making export of goods with payment of tax, in that situation, if you update the shipping bill and other details in your export invoice at the time of filing GSTR 1 return, then the refund is automated by transmitting this data to IceGate, and you will automatically receive the refund. But there can also be a situation where you have reported the export transaction in your GSTR 1 return, whereas you have failed to make the payment of tax under GSTR 3B return corresponding to the export transaction. In this situation, your export ledger will be showing a negative balance. So please ensure that there is no negative balance in the export ledger. And if there are any transactions which are not transmitted to IceGate for various reasons, then you file amendment or take necessary actions to transmit it to IceGate and receive refund. The filing of refund application, obviously the filing of refund applications, you have to file it within 2 years from the relevant date. So for March 2024, ensure that if refund under inverted duty structure or refund for export also, if you have missed to file, please do file it in a timely manner so that you will be able to secure the refund. Then the ineligible ITC identification and the reversal. We spoke about the common credit. What about the ineligible ITC part? There might be certain transactions which missed your attention at the time of filing monthly returns. So please review the returns, review the invert transactions at the HSN or SAC level and identify if there are any transactions for which ITC is ineligible. So for identify and take appropriate action in the books of accounts and also GST portal. Recapitalization of ITC. See, during the year, you are purchasing a machinery, there is some erection work going on. So at that time, what you did in the monthly returns, you claimed ITC. But once the financial year is over, you are reviewing the transaction and you see that in your GST registration, ITC is getting accumulated. So when ITC is getting accumulated, again, availing the ITC related to capital goods, it will only increase the ITC balance and it is of no use. So you will also, you are also not eligible for refund unless it is export with payment of tax. So in this situation, you might take a decision wherein you can capitalize the value of ITC along with the value of the capital goods, right? So please make sure if you have capitalized the component of ITC along with the value of that capital good, then the corresponding ITC has to be reversed as per section 16 subsection 3. Then advances, we already spoke about advances, and unbilled revenue also we spoke. If you are engaged in export of goods and services, please make sure that you obtain bank realization certificate or foreign inward remittance certificate from your bankers. Later on, when your export is put to question by the proper officer, at that point of time, it will be really easy for you to substantiate it using these certificates. So please make sure that these certificates are obtained from your bankers and kept on your record. Then those who are engaged in export transactions and those who are engaged in making supplies to SEZ for authorized operations, please do file letter of undertaking if you are intending to file it without payment of tax within 31st of March 2026 itself in form RFD 11. There are certain aspects which we came to notice that the DRC 03, many have filed many DRC 03 for multiple years after receiving the notices. But still the demand ID, the electronic liability register, it is showing outstanding amount. So what you can do, using form DRC 03A, please ensure you are linking the DRC 03 to appropriate liability and the demand is nullified. Please make sure this is completed. Otherwise, the department will assume that you are yet to make payment or yet to take steps against the outstanding demand, and they might proceed to with recovery actions. Filing of ITC 04 return, which is the return related to job work transactions. If you are engaged in job work transactions, outward supply of job work, be it inputs or input or capital goods, so you will have to file ITC 04. If your turnover is below 5 crores, then you will file an yearly return. If your turnover is above 5 crores, then you will be filing half-yearly returns of ITC 04. So for the half year, October to March, the due date is 25th, or the yearly return for that matter. Is there any late fee applicable for ITC 04? See, as of now, there is no late fee as such, but general penalty might be applicable in one situation. Another situation is that if you are moving these goods with the support of an e-way bill, then the department might come and say that all the transactions that you have reported under delivery challan, mentioning the outward supply for job work, and you have not filed ITC 04, then they might consider it as supplied. You have supplied these transactions, it is a sale transaction, and you pay tax for this. The department might take that stand. So please make sure ITC 04 return is filed in a timely manner. So These are the most important aspects I wanted to share with you. It's already 4:15. I will just close off the session. So there are only a couple of details which I missed to share with you. So these are about the additional place of business. If there are any changes, you please make it. If there are any changes to the companies in terms of board of directors or new partners have been added, then please make sure that your GST portal is also updated. Then there is an option which has been given in the GST portal for unbarring returns. If the 3 years has been elapsed, then you will not be able to file your monthly return or annual return, but you can submit an application to your jurisdictional officer for unbarring the return, and they might do it on the basis of considering if there is a genuineness in the reasons. And finally, for GST-AT, if there are any orders which you have received unfavorably from the first appellate authority, then it is the time to take action. Please ensure that you have initiated filing of appeal with the GST-AT and the payment of pre-deposit and intimating that to your jurisdictional officer. We never know when the department will press the hard button and they will come to you for recovery. So please make sure the appeal is filed on time. So thank you so much everyone for your patient listening. And now I will take up some questions if there are any. Okay, so there are certain questions which are there in the chat box. Invoice portal does not allow generation of invoice post 30 days, and you are saying there is no statutory time limit for them. See, sir, I did not say that there is no statutory time limit for generation of invoice. I said that the government is tightening the gaps wherein for e-way bill or e-invoice, there was no time limit initially, which was given, right? But now please ensure, as I told you earlier also, the most of the ERPs that are available today is equipped with direct API linking with the GST portal, and it will be easier for you to generate invoice. Please make some internal controls, make some changes at the accounting level, and then you issue the invoice in a timely manner, sir. As in debit note for quality issues, but the suppliers are not issuing credit notes. How to report unmatched debit notes in GST returns? Sitaram sir, okay. Sir, please insist your suppliers to issue credit notes, sir. If they are not issuing credit notes, then what happens? Then Rule 37 might kick in, sir. Proportionate payment we might not have made to our suppliers within 180 days in form of debit notes, right, sir? So that might happen. So the whole value, the bill value, we might not have paid them. Then the ITC claim might also be questioned. So for that reason, please insist on them to issue credit note in a timely manner, sir. Please tell me which percentage of RCM applicable for mentioned in the, sir. Sir, I will share the PPT. If you are talking about something in the PPT, I will definitely share the PPT, sir. Sitaram, sir, okay. We are having two different companies, sales and purchases are there among the companies. Whether can we set off receivables and payable and pay net amount? Sir, yes, it is very much possible, sir. You can do that, sir. These are Aadhaar authentication must be completed. Sir, please complete the Aadhaar authentication. If there is a case where you are going for filing of refund, then Aadhaar authentication is must. And please make sure the portal might also come up with some validations where many activities might be based on Aadhaar authentication. So please make sure Aadhaar authentication is completed, sir. What is the maximum time we can take to generate invoice, sir? It is 30 days only, sir. Kamal Raj, sir. As of now, for turnover of about 10 crores, below 10 crores, then as of now, there is no specific time limit, but it is the best practice to generate invoice at the time of issuance of invoice itself, sir. Maige Gowda, sir. Okay, I'm not sure if I'm pronouncing correctly. Surely we'll share the presentation. If we sold any land, is it applicable for 40? Sir, yes, sir. The stamp duty value has to be taken as exempted turnover. Srinivasan sir has asked about Rule 42, Rule 43 reversal for sale of land. So Yes, sir. It is applicable. The stamp duty value we have to take as exempted turnover and reverse the common credit. In this case, if the value of land is very high, I suggest that you do the working for calculation of common credit at the invoice level, sir, so that the common credit will be a very lesser amount, and you can do the reversal accordingly. GTA party, how to switch from RCM to FCM? Sir, file annexure 5 and it will be switched from RCM to FCM, sir. Madhu sir is asking about Aadhaar authentication. If Aadhaar is available, since it's possible to KYC by upload. Sir, there is a link which is available through OTP. Aadhaar authentication is facilitated in the GST portal, sir. There is no requirement to upload the Aadhaar number as such. So I think I've answered most of the questions. Okay, there is one more question from Kamal Raj, sir. Sir, one of my client is scrap business and is GST cash TDS is deposit in login. Client is requesting us to initiate refund monthly. Is it advisable that we claim cash ledger amount monthly? Sir, if it is not used for making payment of tax, if your outward supply is adjusted against ITC itself, then claim it on monthly basis itself, sir. Not a problem. Accumulating it will not be of any use, right? So you can claim it monthly. Not a problem, sir. So I think I have answered most of the questions. If there are any more questions, please do write to us. I also urge all of you to use our notice management portal, and we have also come up with an AI based reply system where I request you to use our AI based reply system and give us feedback so that we will keep on improving, and we are striving to provide you better services in future. So we will meet in another webinar. Until then, thank you so much.